Good morning, traders. Welcome back. Market Analytics, the last day of our trading week, Friday. It's time to go back to the dollar versus the Canadian. What a fantastic story we have here behind the situation here. And you're probably already familiar with the story, but let me give you a bit of a recap. Everything started here when price was taking the previous lows and breaking back above the 200-day moving average. That's where we actually got involved in the first place. We took a bullish position, and the intention was actually to go far, far beyond the previous high, right? We had a pretty ambitious target at that point, looking at the long-term perspective, but we also had a secondary target and an important obstacle at 34.16. And when we got here, we not only took out 50% of our position, which was in a nice profit, but we also declared that this level have to be overcome for us to keep carrying on with the position. It took about 2 or 3 days for price to completely capitulate after a noticeable attempt to break through, which failed, and we split. We closed out that position, ending up with a nice profit, even though our big picture conviction was off, right? Because we thought we were going to have a massive upside trend. Now, later on, when we were on the sideline, we noticed that price, with a lot of force, actually came straight down and broke below 33.01, and also, right, was closing below the 200-day moving average. It was basically breaking the 200-day moving average, and of course, the bottom support, last line of support, 31.99, which defines this particular trading range. At that point, actually, when price was crossing that 200-day moving average, I started to suspect that we're going to have a full-fledged downside trend. We're going to have basically a breakdown rather than a break up, which means a sustainable long downside trend. That was the potential. So basically we flipped over, right? We were sitting on the sideline for like 2 or 3 days, and then we flipped over and established a short position on the premises of breaking down out of this blue system. Let me give you a quick look here on the big picture, which is the weekly chart. So you can see price is just leaving off that 31.99. Looks like we're gonna have a genuine breakdown. Now, the big picture, well, the setup itself actually comes from the monthly chart. This is what we think is going to happen. We've seen already 3 legs in this formation. Now price is made, well, as you can see, made it already halfway through. We think it's going to land back at the lower section, which means 27.75, right? That's our primary price target. So prices have been doing pretty well here on the downside in the last few days. And you can see that I've allowed myself to pull the trigger the second time just yesterday. So increasing the position, and even though price came down quite significantly yesterday as well, we're not ready yet to pull the trigger the third time. We're probably going to do that when price is going to trade around 30.50 or 30.60. But for now, we're going to keep it like this. So at this point, we also wanna update the stop loss level, right? Initially, it was 33.80. Right now at 33.30. So that was a 50 pip of an adjustment to the stop loss level. And as long as price remains here on the downside and keep edging lower, we're going to keep adjusting our stop loss level accordingly, of course. All right, so we're closing in on our price target, but it's pretty far still, I would say, right? We got about 250 pip still, 300 pip to go. So we'll have to come back and follow up on the situation. That's about that for the dollar versus the Canadian. Looking pretty bearish. We'll see you in the next video.